Hello friends, a very warm welcome to my channel. In this video, we are going to analyze another public sector enterprise. After our recent video on Cochin Shipyard, we received a lot of requests to analyze another public sector undertaking. And out of the close poll in Telegram, this was chosen. So this is again a very interesting business. Now this is focused on more on the defense sector. And the company has a very bright future. We'll talk about more in the coming slides. If you're new to the channel, please do subscribe and hit the bell icon to get updates of all the new videos that I upload. And if you're not a part of a Telegram channel, do join today by clicking the link in the description so that you join the correct Telegram channel. Every day morning before the market opens, I share my views on the market. I also share how the capital allocation should be done so that your portfolio returns increase. So let's begin the analysis of Bharat Electronics. This will be a flow-fast discussion. We'll talk about the business model in brief. Then we'll look at how the stock has performed the last few years. We'll look at the main financial parameters. We'll understand why the stock has given such a big rally post-COVID. We'll understand what is the outlook of the management going forward from here. We'll talk about the valuations, the risks of investing in this company, and then we'll form an overall view on the company. So Bharat Electronics is a research-driven electronics manufacturer, and a majority of its revenue comes from the defense sector. It manufactures products not just for India but also exports abroad, and gradually their export share is rising. It's a Navratna PSU. It was established in 1954. It's more than a 6 decades old company. So in terms of product, it's a multi-product company, research-driven, technology-based company. Right from the design, development till the manufacturing, the entire process is done in-house. A few of the ancillary parts might be delegated or outsourced to select manufacturers as India. So it's a major contributor in the Indian defense sector, and in terms of scale, it has more than 8,000 employees, and it will be very interesting to note that more than 50% of the employees are in research. So when we talk about the products which they manufacture related to defense, they manufacture radars, fire control systems, weapon systems, the communication equipment on the battlefield, and several other products other than the ones which we have discussed. For each product segment, they make a separate business unit. Right now the company has 29 SBUs, and they are forming 4 new SBUs for new products which they want to manufacture. And these new products would be in the sectors of network and cyber security, unmanned systems. Now this is something related to drones, and arms and ammunitions. Now there is a portion of revenue also coming from the non-defense sector, as the company doesn't want to rely totally on one sector, and gradually the company aims to increase the share from the non-defense sector to 30% going forward in the coming years. So when we talk about non-defense, they manufacture smart cities, security solutions, cyber security solutions, homeland security solutions. They are also into space related products. Broadly, this is the breakup of the revenue. 80% of the revenue comes from defense, about 15% from non-defense, and 4% from exports. Going forward, this 15% can go as high as 30%. So this is how the stock has performed in the recent few years. Pre-COVID, the stock was consolidating for a very long time, and post-COVID, because of the increase in spend in the defense sector and the PSU coming into the limelight, the stock gave a massive rally up to a price of almost 340 zone. And from there was a sharp correction in the recent fall in entire public sector undertakings. And the stock started making a bottom at somewhere around 250 range. Right now, as the results were good, the stock is consolidating at somewhere around 250 to 300 range and building a base. Compared to the other public sector enterprises, this stock has not fallen much because the valuation is not that expensive as compared to the others. And there is clear visibility of growth going forward as well. In terms of fundamentals also, BEL is quite strong, which we'll discuss in the coming slides. Now if you see the revenue growth in FY21, they did a revenue of about 14,000 crores, which has risen to almost 21,500 crores in the trailing 12 months. So there has been a steady increase in revenue in the last 5 years. But if you observe in terms of CAGR, the revenue has not been very impressive. The last 5 years growth at CAGR level is just about 11%, and 3 years is about 13%. EBITDA has also shown a steady rise from about 3,200 crores in FY21 to almost 5,700 crores in trailing 12 months. The margins are more or less stable at the range of about 23 to 26%, and going forward also the company expects the margins to be in the same range. It's a high working capital business with inventory days of almost 250 and debtor days of almost 4 months. It's a cash-rich company with cash balance of more than 8,000 crores. Now what led to the rally in the stock price from the COVID lows is there was a steady growth in revenue. That the company has also done this in the past also, but the PE got re-rated. That means the market recognized that this company was trading at a low valuation, and the order book massively increased, which led to the re-rating of this stock. The government's focus on this sector increased, which led to the sector having tailwinds, and the entire basket of stocks in this sector got re-rated. In fact, going forward also, the government is very particular in growing their defense sector, not just for India. They want to focus on export of defense products abroad. Now, what is the growth outlook of the management going forward? As on October 2024, which is the latest update in the earnings call recently, the order book stands at almost 75,000 crores, so which is almost more than 3 times the FY24 revenue. So there is clear visibility of growth in this company. Out of this 75,000 odd crores of orders, 86% of the orders are from defense sector. And in FY25, the company is planning to do a capex of 800 crores. And this year in FY25, the company is expecting fresh order inflow of totaling almost 25,000 crores. So considering all these things, the management is giving a growth guidance of almost 15 to 17% in terms of revenue in FY25. And the EBITDA remains in the same range of 23 to 25%. So what is new in terms of products? They have launched 40 new products in FY24 so far. And they plan to introduce more new products going forward. They have done a recent joint venture with an Israeli company, and the company has also done MOUs for their non-defense products with Airport Authority of India, Delhi Metro. They have also done a couple of agreements with a Russian company and a Canadian company. So this shows that the company has clear focus on increasing their exports. Now, what are the new products which the company is planning to focus on going forward? Indigenous missile systems rather than importing products from abroad, RF seekers, infrared seekers, arms and ammunitions, and very interesting is anti-drone systems, which is getting more and more traction. As we see in the Middle East, the main attacks are done by using drones. So this equipment becomes more important day by day. When we talk about the valuations of the stock earlier, the stock was trading at somewhere around 20 times the multiple. But post-COVID, there was a re-rating and the multiple at one point of time went as high as 60 times. Right now, it is trading at 48 times the earnings, 12 times the book value, and 10 times the sales. So although from the top the valuations have slightly moderated, but still they are not very cheap. So further re-rating from these levels, looking at the present growth of about 15-20% every year, may not be so easy. Now, what are the risks of investing in this business? If the sector slows down, if the government spend or focus on this sector reduces, that could be a major risk for this business. Having order book of 75,000 is one thing, execution is another. Executing it in a timely manner is another thing. If the government changes its policies towards defend, changes its spend towards defend, or any regulatory changes, that could be a major risk. If they fail to maintain working capital efficiently, that could be a risk, but that is a rare possibility because they are sitting on very good cash balance. If the government plans to further reduce stake in this company, that could be an overhang on the stock price. And in terms of technology, if the company doesn't innovate, if the R&D spend reduces, that could be a risk. So now that you've understood the business model of the company, the valuations, the growth impact, the growth outlook of the management, the financial parameters, what is our overall view on the stock? If you're already holding this company from the lower levels, you should continue to hold because the company has clear revenue growth guidance of 15-20% in FY25, and going forward also there is a strong order book of 75,000 crores. The margins are also expected to maintain in the same range, so this shows clear visibility from a growth point of view. But if you're looking at a fresh entry in the stock, in terms of valuation, the stock has already got re-rated, so you can expect moderate returns equivalent to the growth in the profits and sales of the company going forward. So if you're an investor expecting that kind of a return of about 15-20% going forward, then this could be a very suitable bet for your portfolio. And by sheer luck, if during the market fall, if this stock is available at a very cheap valuation, then it would become more attractive from a valuations perspective. So that's about Bharat Electronics. I hope you like the crisp video. I've tried to cover all the important points in this video of about just 10 minutes. If you like it, hit the like button and subscribe to the channel. If you want me to make videos on your favorite stocks, do mention the names of the stocks in the comment section. Do join our Telegram channel by clicking the link in the description button. It's a free channel. Thank you for watching and have a wonderful day.